Jimmy Song here. He came to the house today with some really great friends of mine. They just made a whirlwind trip all over from El Salvador to Vegas. He was kind enough to come in and give me his story. He's been in this space a long, long time. I would ask that you follow him, get his new book. What's the name of the new
Fiat
book?
Ruins Everything.
Fiat Ruins Everything. That's probably a really, really great title. I think it pretty much tells the story. Jimmy's an awesome guy. Been buying Bitcoin since the dollar's got a really good basis for understanding of Bitcoin and how we will all be more free with Bitcoin than fiat. So you got into Bitcoin when?
2011.
Yeah. What brought you into the rabbit hole?
Yeah. So I read a story on Slashdot. So that was like my first exposure. That was February of 2011. Internet-only currency Bitcoin reaches dollar parity. By the way, are we recording?
Yeah.
Oh, okay.
Yeah, we're recording.
I just do it very. I'm a very relaxed guy.
Yeah. So it was
Vivek walked in here one day.
I heard.
He walks in the front door. No entourage. I love this about him. No security. No. Now he's not like just flying around, but he walks in. I said, "Hey man, I got mics and cameras all over this place. You cool?" He said, "I'm cool."
Okay.
And on the way out, 2 hours later, I said, "You want to edit anything?" He said, "Nah, man, I'm good."
I'm good.
I'm impressed with that. I think that's pretty cool.
Yeah.
Sorry to.
Well, all right, so 2011,
Yeah.
I see it, February 2011, internet-only currency Bitcoin reaches dollar parity on Slashdot. See that story, and I'm like, what the heck is this? Because usually as a tech guy, you pride yourself on at least knowing something about everything. But this was something that was just completely off my radar, didn't understand what it was. So I looked into it, and it sort of like hit me pretty fast because I learned that it was scarce, that it was digital, and I had a rough idea of how it could work, just given my math background and programming. I was like, okay, public key cryptography, I think this is how it could work. So I had sort of like a vague understanding, and I was primed from 2008 that great financial crisis only a few years before.
So you had gone through 01, you saw that wipe out.
Yeah.
Then you saw 08, another
Yeah.
wipe out.
Yeah.
They're wiping out real assets now.
Yeah, and that was where I started like looking into the Federal Reserve and stuff, because it was like, all right, what is this $800 billion bailout of bank? Like, where's that money coming from, right? Because they're not taxing us, right? And so it was like a big sort of like moment for me to go and learn some of the economic stuff. And so
So that's fascinating, right?
Yeah.
You study math at a really great school,
yeah,
but you don't really learn much about economics.
No,
no, finance.
I didn't, and I kind of had an inkling that a lot of what they were teaching in econ was like not real anyway. So 2008, when I finally learned it, it was just kind of like, whoa, I can't believe this is how the system works. And then 2011, when I saw Bitcoin, I was like, okay, this makes sense to me. And I had both something of economic and technical background to just sort of get it. And I realized how fortunate I was to have that, because most people are lacking in one or the other. If you're a technical person that learned about Bitcoin in 2011 and didn't have the economics background, you just kind of dismiss it. Oh, this would never work. And if you were if you knew the economics but didn't understand the tech, then you would be like, this can never work. But kind of understood both, so I was very fortunate to kind of see it. Yeah.
Yeah. I was listening to it was either Draper or Novogratz a couple of days ago, and they made I think it was Novogratz, he made a very interesting point that cryptology that we've been studying before Satoshi came around. There was like 40 years of thesis of, hey, look, this money needs to get fixed and this is the right way. Now, no one had done that. Hey, this has been studied like this myth about AI just popping up yesterday. AI has been in the works since what, before I was born, 1952 or something. That would have helped me actually. Just to understand the thesis of cryptology. They've been studying this. This just didn't pop up as an idea yesterday.
Yeah, there's a book by Aaron Van Werdum that he's about to release that's going to like sort of trace all of this. But the history of cryptography goes all the way back to, I think it really started, I mean, like encoding stuff and decrypting stuff or whatever, like started like Julius Caesar, right? Like he had a cipher where he displaced the letters by like 3 letters or something like that. But public key cryptography came in with Diffie-Hellman back in like 76, 77. And like David Chum had like an eCash paper based on public key cryptography, like 80, 81. And he actually tried to start a company, DigiCash, back in the .com days. And that was supposed to be the money for the internet. But credit cards, PayPal, places like that won over DigiCash, so that didn't work. But yeah, it's been in the works for a while. But really, like when Satoshi brought it all together with the white paper in October of 2008, that was taking in a lot of stuff that had been in the works for quite a while. And you can go read Aaron's book about that. I do have an article here and there about the cypherpunk movement and how that was a key part of making Bitcoin. But yeah, it's got a very long history. It didn't really pop out of nowhere.
Right. Yeah. That would have been helpful for me. It took me 7 years to figure that out. I continue to learn a lot in this space. I mean, it's got a lot of history for 15 years, and you've been around since the beginning. What are how do you see the change today compared to maybe the first 5 years?
First 5 years of the Bitcoin stuff?
Of your experience. And you came in 11, right? So 2011 to 16, I first started looking at this in 16. So you've been around for 5 years prior to that. How do you see the world different today than in the very beginning?
Yeah, I think at the very beginning, it wasn't entirely clear to everybody what it was for, right? Like, and there was a lot of different narratives and stuff. People were just sort of playing around with it, and you didn't have.
It was truly an experiment.
Yeah, and people, you didn't have resources, right? Like right now, you can go on Amazon and get so many different books on Bitcoin, and by so many great authors that have a deep understanding of it. Back then, you had nothing, right? Like if you got like one mainstream news article on Bitcoin in like a week, that was like considered a good week, right? like that's like this was 2011 or whatever. And back then, usually the stories were negative, right? Yeah. About how it's
drug
awful.
money.
Yeah. And that was like a narrative. Is it like a transactional currency for the darknet or something like that? But that narrative completely disappeared in 2013 with the arrest of Ross Ulbricht and the end of the Silk Road. That brought in like, oh wait, maybe it's not just like drug money currency, and that caused it to go on a run from like 100 to 1100 in late 2013. But there were a lot of other narratives, I think, along the way and we were still like sort of trying to figure out what it was. And it wasn't really until I think Safedean's The Bitcoin Standard in 2016 that it really got a deep economic basis for what it was, being a really good store of value and savings vehicle. And that's, I think, what it's been since then, though, there's been always like pushback from various people and various groups. But I think that's the biggest difference, is that first 5 years, the narrative was always sort of like murky, right? There was a period of time where it was, there's blockchain is interesting, but not Bitcoin, or there's all these other coins and stuff like that. I mean, to some degree, the altcoin narrative continues today, but they know that, Bitcoin is money and they have to compete in some other way, and they're all centralized and not really worth anything, in my opinion. But the narratives around altcoins have changed as well, as the Bitcoin narrative has been clarified.
Well, on that, and I've never asked anybody this question, but because we compare Bitcoin to altcoins, and look, I to be clear, because we don't know each other well, I see Bitcoin as its own unique asset class. There is no, unlike energy commodities, which has distillates, gasoline, crude, rich crude, sour crude. It's got a bunch of nat gas, uranium. You might be able to put uranium in another bucket, but most of those are energy commodities. Bitcoin is the only asset I know that is its own asset class. And there's been this horrible error made with taking these altcoins, including Vitalik or whatever his name is, the 30-year-old kid. Like when I look at these two, hey, I have the opportunity to invest in a non-human era event, or I get to go buy these coins. The point I'm trying to make is, when you say they're not worth anything, see, I think they're worth kind of like what Visa, MasterCard, and all those guys are worth, or Clipper, or maybe XRP, or like they may play a role. Okay, Visa, MasterCard are probably going to play a role, but they don't look a lot different to me than me buying stock in Visa. In fact, I'd probably be better off buying stock in Visa. They have a, well, they make money.
Yeah.
They generate income, whether you like it or not. How they generate income, or in fact, going to 7-Eleven and buying a lottery ticket. Like, to me, the lottery ticket looks exactly like Ethereum. now, I'm not saying that, like, there's a lot of people that go into 7-Eleven to go get the lottery ticket and they buy a Coca-Cola.
Yeah.
So, is that what you mean? That when you say they don't have any value?
Yeah,
right?
I mean, the weird thing about altcoins is, what are you actually buying, right? When you buy stock in Visa, you know that at least in principle, you're entitled to some dividends should they ever pay them out. With Ethereum, it's not at all clear what you're getting, or with Cardano or any of these things. And they'll have narratives around it, like, okay, here is a coin that's meant for you to be able to place bets on this or that, and you actually look at what they produce, and there's like very little demand for any of that. And it's Ethereum's supposed to be gas for execution of smart contracts or whatever. And
most people don't even understand.
It's not.
It's very edgy kind of.
Yeah, it's all sort of like a LARP for something else, which is they want to be able to issue currency that other people buy, that they print it into existence in a centralized way, and that's the big difference. Is it's nice to get to be your own central bank, right? Like I can issue.
I wouldn't know. Yeah. I wasn't invited to that club, dude. Yeah. I didn't get the little pink bracelet. So.
Right. But if you're creating an altcoin, if you're creating your own altcoin, you get to essentially print money for yourself, and that's the real disastrous thing, which is that these two, like you said, Bitcoin is its own separate asset class and altcoins are something else, but they get conflated together. And a lot of people see stuff like Sam Bankman-Fried and FTX and CZ and Binance or whatever, and think, okay, well, Bitcoin must also be something scammy because all these people are obviously running scams. So, that conflation has deeply hurt Bitcoin, I think, at least in the retail mind. I think Bitcoin's going to do fine, but that's why I say it's like providing negative value to society, civilization in general, just because it has this conflation. And honestly, a lot of VCs, people like that, the tech crunches of the world, and a lot of other people have a motivation to, or have an incentive to create that conflation because, hey, Bitcoin's done really well over 15 years. You can buy my altcoin, which will also do really well over the next 15 years or something. And of course it doesn't, but that's the narrative that they try to spin, and a lot of people fall for it because they feel like they're too late to Bitcoin.
Yeah.
Yeah.
Yeah. Well, the thing it does for me is it shows me how poorly educated Americans are. I don't know about the rest of the world. I'm assuming the rest of the world has a similar allocation of these other tokens. Like I'm always stunned that somebody would stand in line for a lottery ticket. Like it shocks me. Okay, $23 on a lottery ticket, and you have to wait for two people. Like, and I'm pretty sure these two people are not making $100,000 a year. That's it, right? They look like plumbers, and it's cool. But why they're buying lottery tickets is beyond me. And it's the same thing with buying some of this other stuff, right? Now I look at it, and literally, you just got back from Vegas. I look at most of these and go, it's zero difference between that chip. You know the question about Vegas. When do you lose your money in Vegas? As soon as you get the chips, dude. As soon as you transferred your fiat for that little chip, you have lost your money, right? Because you got to go back to that same counter to get the cash back. Most people don't. But they seem exactly the same as to me.
And that's right. And this is what I would call sort of like that fiat mentality of thinking that, you'd rather get lucky than work hard and provide value, right? Like, and that is the fiat mentality, right? People would rather have like this one lucky trade or one lucky moment than develop character and provide value to other people, which is traditionally the way to make money. And
produce something.
Yeah, produce something, produce value for other people. And you get remunerated for doing that, and that's how you're supposed to build wealth. This is why people that were rich, at least in the past under sound money, those are the people that were respected. Because why? Well, you obviously provided value to other people. That means you have some skills, you have character, you've done something. But instead, we have this shortcut with fiat money where you're able to make a lot of money by sort of being in the right place at the right time, being a Cantillon winner, right? Like doing things that don't add value, but you're able to rent seek in some way, being a government bureaucrat or, having some position in investment banking or something like that. And they would all rather do that. And this is the curse of fiat money, is that it creates so many positions like that where you can become rich through not providing value, that people pursue that instead of actually building civilization.
So you use the word fiat money, and one of the things you said was the fiat construct creates this gambler. Describe to me what you mean by fiat money, because I think that word is really not misused, but misunderstood.
Yeah, fiat money is like the US dollar, the euro, pretty much every currency that's in existence. It's not backed by anything, and it is created out of thin air by a lot of banking entities, basically. So currently, like one way to measure how much fiat money there is the M2 money supply in the United States.
M2.
Yeah, M2.
Yep.
So that the earliest measure that we have that you can go look up on the internet, you can look at the St. Louis Fed charts and stuff like that. Starts in 1959, January 1959, $289 billion. That's all the money in the world at that moment in one measure. You look at it.
289 billion.
Yeah, 289 billion. Currently, it is like somewhere around 21, 22 trillion.
Yeah.
Right. So that's a significant expansion.
Is that 1,000? Is that 1,000?
No, it's like 70x, 73x.
Yeah, close to 100x.
Yeah. So if you figure out the annual rate of expansion, I guess it would be like a CAGR calculation or something like that. It ends up being about 7% a year. And this is the U.S. dollar, which is the best fiat currency.
The best.
Yeah. So you're.
So I just see. I use the word fiat. I go political currency.
Yeah.
See, I like to use it's political currency. Someone is using politics to, we're going to throw more money out to get votes, right? We're going to give you $1,600 for COVID-19. That was literally printing massive amounts of money, right?
But I mean, that's not the only place where it gets printed, right? And this expansion, 7% U.S. So every year, if you just keep dollars, your portion of dollars is debased by 7% every year. Now, that's the best currency. The global M2, if you measure every currency and weigh it and so on, ends up being about 14% a year, which is crazy. So for every United States, you have another country like Turkey or Lebanon or something that's like 25% or more, which is absolutely crazy. But that's the degree of debasement that you're getting through essentially stealth taxation, right? It's not legislated, it's not transparent, but it's taxation nonetheless because they're taking away some of the value that you've provided to other people. So that's what I would call fiat currency, and it was more or less an innovation as part of the Bank of England. That's the oldest central bank-backed fiat currency. They've tried other fiat currencies in the past. In the United States, you had the Continental, right, during the Revolutionary War, and the Congress didn't have any money, so they just created the Continental, and the inflation on the Continental was insanely high, which is why in the Constitution they specifically put the money has to be backed by gold or silver. Of course, it's not.
Then they changed that rule.
Yeah. I mean, they didn't. They don't have a constitutional amendment or whatever. They've just sort of ignored it because, at least according to legal fiction, still backed by gold as per Nixon, because 1971 with the Nixon shock, he temporarily suspended gold convertibility, and that number of $35 to an ounce.
Yes.
Is still on the books, though it's like completely like a legal fiction, right? If you could go get an ounce of gold for $35, you'd be buying it all day long.
Yeah, that's right.
On the market, it's over $2,000. So, that's how they sort of keep that legal fiction going, that it is backed by gold or something, but it's not.
Yeah, well, they make the numbers up. Yeah. I spent 14 years in Europe, and I kept asking this question over and over and over again. I've asked it for 30 years. Never got the right answer. I'm not sure there is a right answer. I think there is a right answer, but and the question is, to what Tone's talking about, he's talking about debasement, right? Like they make these numbers up. Gold pegged at $35, now it's at 2,000. Who wrote that off? You see no write-offs. Why does this is the question. When I went to the United Kingdom, the sterling was at 176, $176 to every pound sterling. Now it's at 124, I think. The euro's at 108. It's been up as high as 125 or so. Why? Why would Europe, that produces less than America, does not have its own agriculture, does not have its own energy? The UK has none of this. They just talk about it. They have a big financial district. Why do these currencies trade at a premium to the US dollar?
Like, why is it getting stronger?
Well, no, why has it always traded at, I've had economists look, well, the sterling doesn't trade at a premium. I'm like, dude, when I go to the UK and I have to spend $1.76 to get one of your pounds, that's pretty much a premium. Any way you cut it. Now, right now, it's 124. It's a premium, right? Why? The Canadian dollar trades at 70 cents to the dollar. So it's clearly trading at a discount. Why does Europe trade at a premium?
All right. So it's a little weird to be looking at it at a unit level, right? Because it's really more about like the entire supply.
Yeah.
Right? But what you're getting at, I think, is basically that there is central bank management of these currencies.
Sure.
So
I mean, it's called a peg, right?
Yeah.
That's what I want everybody to say.
Yeah.
Because it's pegged that way, dude.
It's pegged that way.
That's the only reason.
But there's more to the story than just the peg, because you can peg. Every central bank tries to peg to the dollar because they want. Well, they have to, because for their economy to function, because otherwise, like, imports are too expensive or exports are too expensive.
Right,
and you need to keep that in balance, because if imports are too expensive, no one can like produce anything that requires goods from other countries. If exports are too expensive, then you're not getting any demand for any of your stuff, right? So they have to manage that. The way you do that as a central bank is you need a reserve, right? And the reserve currency of the world is dollars. So you need some dollars to balance that out, right? So you can always make your currency weaker by printing more of your own currency. Easy enough, right? But to strengthen your currency against the dollar, you need to buy your own currency back using dollars. And that can be very difficult, especially if you run out of dollars. Right? Once you run out of dollars, well, you
have nothing to buy.
Yeah, you have no dry powder.
This is Venezuela. This is Argentina.
Yeah.
Yeah.
The interesting part there is that as you're starting to run out, everyone can see the writing on the wall, and you're gonna die. But if you're friendly with the U.S. government, what they can give you is a swap line. And a swap line is basically a loan, right? Like, okay, we're going to loan you some amount of dollars, and you can pay us back later, something like that. But if a central bank has a swap line, now you have, essentially an unlimited amount of dollars to go and use to buy back your currency to strengthen your own currency. If you have a large amount of reserves, this isn't a problem. But if you're running out of reserves, this becomes critical because now you can defend your peg, and you have a lot of ammo to do that. So what that does is it puts the U.S. in this position of being able to dictate policy all over the world because every country knows, okay, if our economy is to run, we need this peg, and if we're to keep this peg, then we need to make sure that we can get a swap line with the U.S. central bank, the Fed. And if we want to do that, we better be friendly and do whatever they
ask us to do.
Whatever they ask. Yeah. So this is why all over Europe, everybody piled in on Ukraine, right? Because
they had to.
They had to because if they refused the U.S.'s thing, even though like in many ways it didn't make sense.
That's why they blew the pipes up, man.
Yeah, I mean like
they did not want Germany to go, hey, we're buying this shit, whether you like it or not, embargo or no embargo. The U.S. has them all by the balls, right? Yeah. Like you can't defy the U.S. without some serious consequences that can come at some point. And you can kind of see it because all the countries where you experience hyperinflation, they've pissed off the U.S. Totally.
Right? Like Venezuela, Lebanon, Turkey, Erdogan with Argentina.
Iraq, pillaged and sodomized in public, man.
All of these places have this, incentive to go along with the U.S. as a result of that. And if you piss the U.S. off, well, we can devastate your economy. And this is the sort of Damocles that the U.S. holds over everybody else. And this is how you get
Damocles. Can you define that for the audience?
Oh yeah.
My audience has a smaller IQ than your audience.
It's a Greek myth about like the sword that's hanging over somebody's head, and
right.
It'll chop your head off at some point
if you don't behave yourself.
Yeah, which is the idea. So it's this is how the U.S. essentially controls the world through the dollar. Is you can because it's the reserve currency of the world. The dollar can be used to manipulate these things so that, hey, once you get in trouble, we're not going to bail you out, right? Like and this is how they get, not coincidentally, like how they get bank cooperation all the time as well. Like,
correct.
If you're in trouble, we're not going to bail you out, so you better do what we say. So you can run stuff like Operation Choke Point, right? Like this was a Obama era program to shut down payday lenders and gun shops and marijuana dispensaries and places like that. So
that brings me to I love doing these kind of free flowing because it always goes where it's supposed to go. But do you see with the currency, the M2, the control you talked about from the U.S., none of these countries have ever had an option. right? No options. They can't print their own money because they did a deal 10 years ago with the IMF and the U.S. government. There is no printing of that because they're on the hook, right? They're on the crack. They can't get off the crack. Do you see Bitcoin offering beyond San Salvador? I don't want to necessarily
El Salvador.
El Salvador. I don't want to necessarily use that as an example, but a Turkey, a Spain, an Italy. I keep saying, hey man, there's going to be a small nation in Europe that says, fuck, we have to do something. They are so piggy in the middle. They are so screwed right now. All 13 countries. I could see Turkey. I could see Turkey doing it. Like Turkey is like slammed in the middle. How does Bitcoin play a role? And if it does play a role, when would you anticipate that to happen?
Yeah, I think it's already happening. I know you don't want me to talk about El Salvador yet, but
it wasn't that. But we need more, right?
Yeah,
I mean,
we do. But that to me is sort of like the test case, or like Bukele, I think, is showing the world how it's done. But like,
it's been a good move for him.
Yeah, it has.
He suffered through the worst of this.
Yeah, and I mean, you go there and you can see just how great this has been for El Salvador, because like there are buildings everywhere. The roads are all like freshly paved and everything's getting built, and infrastructure. Like it's there's capital investment in the country, and it's good for the country. He has a 93% approval rating for a reason. People in El Salvador love it, right? Like they're like, okay, it's safe. We can start businesses.
We haven't seen that kind of approval rating in a long time.
No, we haven't. But here's and this is something that I talk about in my book, Fiat Ruins Everything. Like
you just wrote a new book, right?
Yeah.
It's being released?
Yeah, it's already released. So when you're looking at the IMF and things like that, you have to understand that there's this dollar hegemony, and that central bank thing that I described to you earlier is just a part of it, right? The IMF works with more developing countries and keeps them under their thumb, and like you said, they give them these loans, and everybody that takes these loans, they have certain conditions on these loans, specifically about how much building that you can do in your own country and so on. Most of the time, what ends up happening is that whoever the money is lent to, they have an incentive, because they are not expected to be in power that long, to take out as many loans as possible and embezzle a lot of it for themselves, or give it to their cronies or something, but spend it very badly so that there's no chance that you're going to be able to pay back the loan.
You're saying they don't want you to recover so they can lean into you more.
Yeah.
Right? It's like organized crime, extortion.
Very much so. Yeah. And when it comes time to pay that back, years later, might not even be the same administration.
Sure.
Might even have had a revolution, right? Like complete revolution. But the IMF's always like, you have to pay this back. Doesn't matter, right? Like it's, I don't care if it was, you're not part of this administration. And repudiating debts like that, that'll get you in serious trouble.
It could be paid back by a phone call to Caterpillar going, hey, Caterpillar, we just got you 10 million acres in XYZ country.
Yeah, so that's usually what happens.
Start ripping the resources out of the ground.
Right, so it's usually, you're made to remake the economy, right? Usually for goods, raw material goods for Western countries. So you might use mineral rights or whatever, oil, whatever it is. But oftentimes, like if a country doesn't have that, they'll be like, okay, now you're going to produce palm oil for us, or coffee beans, or cocoa beans, or whatever it is that we need as, bananas, whatever.
Sure.
And these are all raw materials that go into Western countries for further development or for consumption or whatever. But this is why stuff tends to be fairly cheap, because it gets subsidized by all of the labor in these countries where labor is insanely cheap or whatever. But they're kept down, right? Like all of these countries, and what happens is that you get sort of like you become kind of a slave country in that sense, and the IMF actually kind of wants it that way, because this is the prosperity that first world countries get. It's off of the backs of all of these these countries. So when we're talking about like how did they get out, what they need to do is be able to pay back these IMF loans and not get like sort of raped from, have all of their resources basically taken away from them. And what Bukele is showing is, okay, I'm going to go out into the market and go raise money based on the natural resources that we have. Instead of selling it off and then like paying back the IMF, I'm going to invest in this. Yeah, produce something with it. So El Salvador has a bunch of volcanoes.
Yep.
And they found investors to create volcano energy, right? And geothermal is like a 4 or 5 year capital investment. You don't get anything out for that, but they've started. And they've been able to say, no, I don't want any more loans, IMF, so therefore you can't tell me exactly how I can spend my money. And that's been good because they want to invest in infrastructure, roads, toilets, plumbing, all kinds of stuff like that. And you can see it, physically see it when you go there. Everything, all that stuff is being built, which means that the private sector is saying, okay, well, now that there's like plumbing lines and sewage lines,
we'll build a home.
We'll build a hotel, right?
Sure,
Like we'll
sure,
build
sure.
this, we'll build that.
Yeah.
And there's more people coming into the country because it's like an amazing surfing destination, beautiful beaches, stuff like that. And that's creating more tax revenue, which now they can use to go pay off these IMF loans so they can be unburdened from that stuff. And that's their tactic, right? Is create a safe environment for businesses.
How old is he?
I think he's in his late 30s, maybe. Yeah, or
Young
maybe
guy.
yeah, fairly young. Yeah, but he got his start, I think, as a mayor of one of the towns and stuff, and he tried.
I think we need more of that. We need more. Like I like Vivek's age. Like I'm twice his age. I'm like, hey man, we need some young people here that don't have well, they haven't been prostituted through the whole system. They don't owe favors to anyone.
Yeah, and that energy, right? Like of trying different things.
Sure.
And like the people that are older, they want to just sort of keep their position, right? Like their mentality is, I can rent seek off of this thing and make money doing nothing. And that, you can see it in like the Republican primary debates. Oh my goodness, like just everybody but Vivek, there's clearly bought by somebody where it's like, okay, I have to have this narrative in order to win, and therefore I'm going to do it. And it's all just sort of like political theater or whatever. But that would be the way to do it is by actually paying off the IMF loans and then like being your own country and allowing building to happen in your own country. Like El Salvador, very little investment happened for a long time, especially internationally, because there wasn't any of this stuff where the government was actually trying to build or empower the people. I think that's the direction you have to go, and that's how you get.
Do you think more South American countries will follow suit?
Well, you at least have a leader in Javier Milei that's talking the right talk. Now, whether he walks that walk is another question altogether.
But all of them are going to end up at the same answer. Their currency is like, all you have to do is go to all these island nations and go, wow.
Yeah.
What happened? You have everything you could possibly want, and every one of you guys are declining.
Yeah, well,
Acapulco's a shithole now. Like I remember when it was the destination, right? Like all of Mexico's just been hammered, and then you go further south. It's no one's. Like it's not a organism that you say is healthy, right? It looks like there's got a lot of crime and poverty, which is really a shame. I hate going to those countries as a vacationer because I feel like I'm actually snowballing this. I'm like, wow, like I'm staying in a $1,000 a night hotel, and these people 3 blocks away are in deep poverty, right? I'm like, oh, I feel horrible, like going to Disney, watching an animal trap. How have you, kind of on the horrible piece, like you've been in this since 11, you said you bought Bitcoin at $1?
Well, that's when I first heard about it.
So, and I'm assuming you didn't just stop buying at $1. Maybe you bought yesterday. It's none of my business. But how have you remained humble? Because I've seen guys that come in the space early on. They make a lot of money, and their voice becomes really, really loud, and sometimes not as humble, and maybe balanced. It's like maybe I'm unbalanced. I probably. But like I love your attitude. You're very kind. You're not extremely rigid. You're not, hey, you're wrong if you don't get it. And sometimes that comes with some of this noise. How have you remained a nice guy?
I don't know if everyone would agree with you on that assessment that I'm a nice guy. Like
so far in my home, you've been a nice guy.
I mean, there are a lot of people on Twitter that have felt my wrath, I guess, and I rant against altcoiners, for example, and the stupid narratives that they have. But I mean, I think.
Well, it's the stupid narrative that I think is funny. You can invest in anything you want. I would love to hear your rationale for this.
What for?
No, their rationale.
Oh, yeah.
See, I think it's easier for a guy like me to go, like I just put a post out and said, I got 30 extra grand. What do you guys think I should post? And they all think I'm going to go do a trade, right? But I'm like, literally, I'm not doing 12 different transactions for 30 grand. 12 different. Like, I'm not a casino. I'm not in Vegas betting on red 21, black 38, Like, I would have more fun just going to Vegas with you and losing 20 or 30 grand to you. In fact, let's not even go to Vegas. Don't give the VIG to anybody. Let's just do it here. But that's all it is. It's just gambling. It's not long-term investing, both your money, but also what I like about Bitcoin is I get to invest in the future, in a philosophical future. That like I do support Coinbase. Like I leave some of my coins on Coin. Why? Because who was going to do this lobbying for us? Okay, nobody, because we don't have a lobby department at Bitcoin. We have a shitty marketing department. Why? Because we have no marketing department. We have no centralization. That's a problem, though.
Yeah, I mean, there are other organizations besides Coinbase that I think are much more aligned.
Use it as like they lobby. They spend a lot of money on supporting this lawsuit.
Yeah, I would say that the organizations that do that, it's like a little bit of a temporary game, right? Because you don't know.
Oh, look, I've worked for these guys. I mean, I've been a part of that public company. It's what they do. But all I'm saying is that I don't think, and I could be naive on this. I think when you're going against the amount of people we're going against that don't want this to happen, having a guy like there spend $300-400 million to protect their own public position ain't a bad thing for us. Now, because the government ain't gonna do it. The Red Cross is not going to come to our help. Right?
No, they're not.
Like there's nobody here, right, to protect. No celebrity's going to pop up. They don't have, like, we don't need the celebrities to show up. We need quality data, basic good information. I think one of the things I see all these Wall Street guys, I think guys like me coming in this space, like literally letting go of all the others, I think it's good. Now, y'all may not like it, but I think it's good to have people that know how adoption works. Adoption does not work from the bottom up, man. I mean, it didn't work for Visa, MasterCard. So it took them 50 years to get 7 credit cards in everybody's pocket. It's a long time.
It might be, but I think bottom up is the way that Bitcoin's going to happen. I'm going to disagree with you a little bit that it's that we need like adoption per se from like sort of a centralized angle, because the way I've seen it is most people come into Bitcoin and they don't know that much about it, and it takes them a few years to get to the point where they really understand what it's for. And I was the same way. I'm sure most of the people.
For sure.
Yeah.
Everything I've ever gotten into, I learned more. Mostly the girls that I meet, I learn more on the third date than I learn on the first date. I use girls as a lesson for everything, because I don't think learning anything is very different than that.
Yeah, well, so it takes a long time, and it takes a few years. Like the people that are into marketing, they think, okay, if they see a couple of Bitcoin commercials and see a Bitcoin ATM, that's enough to get people to become like really pro-Bitcoin. That's not how it works, right? Like the way it works is that you need to really understand Bitcoin. And I think a book like the Bitcoin Standard has been way more useful in that regard, because it's gotten people like Michael Saylor to really understand Bitcoin, and he's like, okay, I get it. And this is why fiat currency is awful and why Bitcoin is really good. And it's that level of adoption that we need, not, hey, I want to gamble. And, they kind of see it like all the other stuff a little bit. It's like, oh, it went up, 15%.
That was the type of adoption I'm talking about.
Yeah.
Is when somebody puts it on a corporate balance sheet.
Yeah.
That he would take the time to get the rules changed on FASB, right? Like, those to me are really, like, I would invest in MicroStrategy stock just because I know he's a very active strategist. Now, does that not make me a Bitcoiner?
No, I think that's fine.
It's an alternate.
Like, yeah, there's a lot of different people like sort of working on that. But the whole point is that they can't take it away, and if you need to, you can leave a jurisdiction with all of your wealth in Bitcoin.
Yeah,
and
that's monster, man.
That's
monster.
Huge, and like people in Venezuela, we had reports of there being a Bitcoin discount in Colombia and a premium in Venezuela. And the reason was a lot of people were buying Bitcoin on the Venezuela side. As soon as they crossed the border to Colombia, they would sell it.
Yeah.
So, this is an enormous thing for a lot of people to realize, is that, yeah, the lobbying, the regulatory, those are definitely concerns. But that's, even if everything went badly there, you still have recourse, because this is something that you can really own, and it doesn't have a physical, it doesn't require like physical moving or anything. So you could just keep it in your brain. That's key.
What do you think the biggest threat to Bitcoin is?
The biggest threat to Bitcoin, it's a hard one to sort of quantify, because I think it's always sort of like unknown beforehand. The biggest threats tend to be like not entirely obvious, right? Like what ends up getting you in the end. But it's not. I'll tell you what it's not. It's not the stuff that everyone is sort of like up in arms about, like government banning it or quantum computing or something like that. All of those things, first, have mitigations, and second, are way less realistic than people think. So the biggest threats, I think, to Bitcoin are mostly around the development and like sort of capture, possibly, by people. But even
capture?
Yeah, like if somehow, we came pretty close in 2017, where we had the block size wars, and a bunch of companies sort of like tried to capture Bitcoin, and it turned out they couldn't. And I think that was a big learning experience.
And by capture, you mean they tried to take a position on it?
Or they tried to take over the development.
I got it.
But yeah, I mean, it's that I suppose is always like a possibility that but the nice thing is, I don't have to follow what anyone says. I run my own node, and the software I run is, like what I signed up for, and they make new rules or something like that. I have no obligation to follow it.
Would you say that you have to be smart to hold Bitcoin? Like, because when you talk about running nodes, and like I'm hopeful some 45-year-old investors, 50-year-old guys like my twin brother who's got, he was given some Bitcoin, but he's not a Bitcoin investor. Like, until you spend your own money on Bitcoin, you're not. How do you pitch them? Because they're scared. My brother goes on these spaces and he hears planting stuff out in the backyard. He's like, bro, first off, how much Bitcoin do you own? And then the guy won't even say it. Like, all Grant's trying to do you own $12 or $12 billion? Do you have any substance behind? But most people don't go in their backyard and plant stuff and see the seed phrases.
Yeah.
He's not going to do that. Michael Saylor's not going to do that, right? So those are the kind of threats to me. Like, how do we get people, like my 75-year-old sister or my 50-year-old brother or friend, to go in and go, hey, I'm going to take $1 million worth of Bitcoin as a long-term investment for my family. This makes sense. How do we get them there?
Yeah, it's a great question. Honestly, like the big hurdle isn't the technical details, which is what people think it is. The big hurdle is the personal responsibility aspect. We're not used to taking care of $1 million gold bar, for example. And the reason is because they've made everything into a registered product. The centralized registry controls everything. So if you own, 1 million shares of Microsoft, what you have is not like actual stock certificates that are bearer instruments. They're registered. Yeah, somebody else. So we're not used to holding our own wealth.
Yeah, that's right.
And that's very odd historically, right? Like even like 500 years ago, if you own property, you better be willing to defend it, right? Like somebody might try to come in and invade it or whatever.
Totally.
Similar thing with gold bars or whatever. And that's the big hurdle, is getting people used to this idea that they're going to be responsible for their own wealth, and that if you screw up, there's no backup, right? Yeah. Like no one's going to come in and rescue.
And nobody's safe.
Yeah, and this is a very like fiat mentality of thinking, okay, there's always like a safety net. Somebody's going to, and that's what they're really scared of. Is not
for sure, man.
Like putting in PIN codes or writing down 12 seed phrases and storing it somewhere or whatever. That's not the hard part. The hard part is convincing them that you can be responsible for a lot of money, because they're always thinking, okay, well, what if this happens? What if, yeah, you should take care of all of those things. That's what being a responsible adult means. But we've essentially infantilized everybody and thinking, okay, well, the government will always be there for you, or some entity will be there for you to rescue you should you screw up too badly. And that's the hard part. It's not about, writing a seed phrase or running a node or whatever. Those are all things, and like people learn like crazy stuff, right? Yeah. Like think about driving, right? Like, or learning all kind, like these are not simple skills, but people learn them all the time.
It's amazing, right?
Yeah.
I drive my 6-year-old, 8-year-old, whatever, Range Rover down the street doing 100 miles an hour. I have no clue how this car works.
Yeah.
Not a clue.
Right.
I've already taken so much risk, right, with that car. And then people come with the Bitcoin and go, I have to understand everything. Like, dude, there's so much stuff you don't understand about everything. But when it comes to this subject, you got to put your hands on everything. But you're right. Most people have not had to be responsible.
Yeah. I mean, I think there's like a middle ground where maybe you have like a technical like nephew or somebody that can sort of hold it for you. And that is more centralized, but at least it's based on a relationship, right? Like if you're trusting a bank, like that's not like a real relationship. That's just sort of like something you're doing because everyone else is doing it. But how would a trust do
it? Because how would a trust do it? Well, let's say that I know they want us to go for lunch, but like let's say that I were to die tomorrow afternoon, and my children this is going to end up in a trust. Like my kids are going to have to talk to a trust about, hey, where do we get access? I mean, it's not just, one example where the original question was, do you have to be smart to do this? See, I would rather people come into the ecosphere and learn it, because I think, like, my pathway, I would never have come in through the direct wallet first. I mean, for $12, I would have. No problem. But for 12 million? Ooh.
Yeah.
Okay, now, like, it's not the way I do my other stuff. I'm not suggesting, I am comparing to a piece of shit over here. I agree. But it's just not the way, and I was in the middle of a divorce. That wouldn't have worked well. Okay, there's a lot of things that, are you okay with somebody coming in through centralization?
Yeah.
To pick up Bitcoin, and then, of course, that's probably the way most people have to do it. Then the question is, can they moderate, do they have to hold Bitcoin in their own custody to be a valid Bitcoin investor?
Well, so I would say that if you're not holding your own Bitcoin, then you're at the mercy of the entity that does. So they can do, and
this is what they're going to think.
Yeah.
Well, I had $10 million in fiat over here. It was with them anyway. I have now $10 million in Bitcoin, or whatever that is in Bitcoin. It's the same guy.
Yeah, it's not though.
But like it's the same entity holding these two. I'm just saying it's the same entity. JP Morgan, Fidelity over here, holding IBM stock. Fidelity Digital over here, holding Bitcoin stock.
Yeah, and this is where it gets tricky because you know, a lot of people thought that with FTX, right? And then they lost all their money. So you can't think that way with even the dollars. If the government accuses you of being a drug trafficker, your account is gone, right? It's all money you have at their pleasure. It's permissioned money.
Yeah.
What you really want is permissionless money, and that you can only have if you possess it yourself. So, I mean, it's if you want it as like investment exposure, that's one thing. Then maybe a custodian is fine. But if you want the freedom money, which is I think what we're all here for, then you need to possess it yourself.
Yeah, no, I totally agree with that. The freedom money. See, that's saying it a way that I can, freedom money, and then you got investment value, knowing that it's got risk because somebody else is holding freedom money. I like that name. We should have called it Bitcoin freedom money. No, just kidding, guys. Okay, it's okay. Anything you would like to add?
Well, I mean,
to this short little video.
I did promote my book, Fiat Ruins Everything. So it's got a lot of stuff about like a lot of what we talked about. I think our talk was more at a macro level, but there's a lot at the individual level, the company level, the nation state level that we didn't get into that's in the book that I think you would find
where do people buy the book?
Amazon.
Amazon? I will definitely get one.
Okay.
I'm going to have to get you to
sign it.
Scratch on it. I mean, why not, right?
Yeah.
Any ideas on ETF?
Yeah, that's like outside my area of expertise, so I'm not going to opine on it too much. But I mean, if it happens, it happens. But
is it a good or a bad thing?
I suspect it's good for the price. For the actual, for all of Bitcoin, I rate it as something like neutral. Yeah.
Yeah. Is it good for adoption?
I mean, maybe a little bit because it'll get people to start learning on it. So maybe it starts that clock of 2 years to really understand it, but it's hard for me to say.
I'll tell you, for me, it gives me another place to increase my pool of exposure to it. Because I have things that are like, they're just not as easy, maybe. There's somebody that's sitting on a bunch of cash sitting there just waiting to buy Bitcoin. I don't know who those people are, but I just do not have closets of cash sitting in this house waiting to deploy.
Not many people do.
Yeah, well, that's my point, right?
Yeah.
Everybody keeps talking about buying the bottom. I'm like, how you buy the bottom, dude? Are you standing on cash?
Yeah.
Y'all are just sitting there waiting. I don't think most people do that. I never catch the bottoms or the tops. So what I'm interested in is, what got me really interested in this was transferring wealth to my children, knowing that they would be free. And see that when the sovereign piece comes in, then I'm like, hey man, one thing maybe buying an ETF, but I want my kids to be free. I do not want them to, hunker down and feel suppressed, like they have to stay here or they can't move around. I think a lot of Americans don't feel like they can leave.
Yeah,
it's difficult.
And financially, they put a ball and chain around you, so it's very difficult to like renounce U.S. citizenship.
Yeah,
and
for
stuff.
sure.
Yeah,
for sure. Any ideas on where price is? I know everybody loves price. Price in this time next year.
Yeah, I think the halving will have some effect, so I expect it to be higher, but I don't know how much higher.
Yeah, that's probably a good. You're probably going to be right.
Probably.
Jimmy, thank you very much.
Thank
really
you,
appreciate
Gary.
it, man. Want to go eat some lunch now?
Yeah.